Yeah. Hello, everyone. Welcome back. Welcome back, sir. Nice to have you again on our channel. So, am I audible?
Yeah, you're audible.
Right. So, welcome back to the Power Pack episode of Decoding Market in Three Moves. So, today we have our host, that is Rohit Srivastava. I think so. He doesn't need any introduction because his name is itself a big brand right now. So,
Shubhajit, you're the
sir,
host.
So I am the host, but I am like sorry for the miscommunication. I'm host Shubhajit and the speaker Rohit Srivastava here. Sorry, sir. Sorry for the blender once again. So moving forward, let's decode the market in three moves. It
Why?
was a very pale week, sir. What we saw, right? No big trends, nothing moving great in the market.
Yeah.
So keeping this in mind, what do you think will be the next week market?
Yeah, it's been pretty painful because this entire recovery uh, was initially just on the panic around the tariffs, and then after that, I think a lot of money got into mid caps, and then we've just lost the momentum.
Hmm.
The hope is that another round will begin, but the market seems to be awaiting some kind of trigger, something for it, whether that trigger will come from a deal on the tariffs or whether it will come from something else. The result season definitely can't be the reason because it was anyway not anticipated to be great. Uh, and many other reasons are there if you look 2 quarters ahead. But in the short term, the trade setup, today's break, basically today we ended up breaking the 25 to 50 level that I had been speaking of, sort of slowed things down. But I'm still see, so so this is all in the short term. When I step back and look at the big picture, I don't see a problem. I think the trouble is essentially in the very short term behavior, and as long as this short term range bound moves continue, the question will keep coming up. That is this a weak market? Is this a bear market rally only? The way it has behaved, but I am not going to that. I'm not trying to believe in that. Simply when we study behavior in a bigger context, how stocks
Mhm.
and sectors have behaved. They've had a correction last year and then they started to pick up from there. If this was a bubble, having seen so many of them, stocks really collapsed during those phases. That is not exactly what is happening behind the scenes. The best performing sectors, they just pop and blow up. That's not what is happening. In fact, the best performing sectors are starting to perform again, and that is sign of a continuation of the bull market. So coming to the conclusion that it's still around. Short term, the pain is essentially in short term trading, because if you don't get trends, what happens is trendless markets, they cause a lot of losses because you can't always predict that you will be in a trendless market versus a trending market. In a trendless market, every 200-300 points you have to get in, get out. If you are able to predict that it's going to be like that, then you can actually deal with it better. We had a lot of that last year, pre-elections, between February all the way till April. In fact, May also, and then you only went up after that in June, July for some time, and then you were in a downtrend. Now again, after this initial bump up, since May, we are in a trendless type of behaving market. I thought when we broke out last week above 25,200, we were done with the trendless phase, but it's again come back few hundred points, and we are again haunted by the same behavior. So yeah, for it to gather momentum, you need something. If you speak to someone fundamentally, they'll say that something is essentially the simple thing known as earnings growth. So if earnings growth gathers momentum automatically, buying at higher levels also becomes easier for most people who allocate funds. So this is in a nutshell, I think, what is going on. But yeah, this week was painful. This is the second week down. So 2 weeks consecutive we've seen down. We're just going to have to keep watching. That on a bigger scale, we are still making higher highs and lows. Someone asking for the next support, it's somewhere between 25,020 and 25,080. So that is the range. We're almost there. So let's see. Next week, Monday should hopefully give us more clarity.
Because this Monday gave us a doji.
Yeah.
So
I'm just going
talking
to have to pull out once there's someone here that I just need to see to. I know we are in a live session, but I'm just sorry for that.
So guys, we just for 5 minutes, just to wait. Till then, you guys can post up your questions on the live chat. So we will be putting 3 questions, and sir will be answering them. Walmart, nice one. I was going through it. Please be very specific about the question. If you guys are asking any question, please be very specific. What breadth, in what terms, like market, in what criteria, long, short, everything. Be as like little specific about the question that you guys are asking. The question should be the entire question. It should contain that. It shouldn't be a half open-ended question. So see, we won't be having an entire clarity of what you are thinking. Okay, so that's where we are asking you guys to post the question in the like entire format so that we can get a more clarified view of what you guys are asking us, so we can give you a answer that is valid to you also. Guys, your answer will be taken after the session. Just a 5 minutes break. He has some urgent work. So
Yeah, we can continue.
yeah. So welcome back. So there are some questions. Will be so. I was telling to the viewers to put the questions in a manner so that we can understand and get a clarified view of what they're asking, so that we like both of us can be on the same page for a better clarification. So
Yes.
moving forward, let me ask you a situation. Okay. So let's say someone recently invested a chunk of their saving into mutual funds or stocks at higher levels. And now the market has dipped. Should they stay put, average down, or exit? What is the smartest way to handle this emotionally as well as financially?
So, see, you're essentially talking about investors. I think to investors, it's not going to matter so much because
Mhm.
the dips here will be just a few percentage points, and then on a 1 year basis, we are going to be in a bull run that is already The setup is already that, which is that we bottomed in April. We are not going back to the April lows. So that people should forget about. वो नहीं आ रहा है. Okay. 21,700, whatever is not coming again. So all your dreams of seeing that level again are crushed. I'm sorry, not happening. If you can't, people can't get that in their head, it's a problem. So then for people who've invested at higher levels, how does it matter if it falls 400-500 points? You can either add more, or if you're doing a SIP, it will anyway get averaged out. If it was a lump sum investment, then also not much of a problem. It's a minor drawdown. I mean, it's not like you're going through a 20% drawdown. If the Nifty falls by 500 points, how much are you going to lose? So you're going to sit around for the next 1 year or 2 years or 5 years, basically on your time horizon to allow it to compound. So that's how a long-term investor would think.
Moving to the next question. In your experience, what's the one common mistake every retail investor make during, or investor or trader makes during uncertain phases, and how can they build a system to avoid it?
So a system would really mean coming down to using certain indicators or tools that allow you to navigate. The mistake always ends up being paying attention to things that you don't understand. I'll tell you, it's even difficult sometimes for the most trained minds to deal with news flows. When things like what have happened recently, from wars to tariffs, take place, a lot of investors, even genuine ones, go on a back foot and say, I don't want to do anything till all this is behind us because we don't know how it's going to play out. Now this is a live issue, but when we look back in history, there are so many events like this which have come and gone, and eventually they've ended up, every such panic has ended up being a buying opportunity. It's really not all, doesn't always result in a situation where it's the end of the world or you end up in a recession and so on. So it's a very tough call that we have to take, which is to pay attention to macro factors like this or not. This is just one type of macro. The other types, there was inflation 4 years ago, 3 years ago. That also caused a global correction. Now, what that inflationary round caused is the biggest sell-off in US bonds that we had seen. But the sell-off started during COVID. It's not like it happened all during the inflationary episode. So a lot of these things are so bizarre that nobody would have thought 10 years ago that if bonds fell so much, it would have no impact. And it's come and gone and been absorbed by the market. So there's so many things that I think are beyond our understanding. For investors, having some systems in place, some basic risk management in place in terms of if they're doing stock selection. See, if you're investing in mutual funds, it's not so, you can't do much about it. You have left the stock selection to the manager. Then you're only doing some level of timing, if at all, when you want to do lump sum, or if you're doing an SIP, it doesn't even matter. Right. The only time it matters is if you've gone through a extreme bubble. Now that's something that most people can't call. We all go wrong in trying to think that, okay, we'll get a deeper correction here. But if you get a deeper correction, it's a point where you want to invest again. If you're an investor who's doing stock picking, yes, there a lot more risk management kicks in. You need to throw out stocks that are not performing, not growing, whose stories have run the course. At the same time, hang on to the ones that are still playing out, which have become the themes of the bull market. So whether it's hospitality, to just give examples, that has become a post-COVID theme. There's been a huge re-rating of hotel stocks for the first time since the 1990s. In fact, even pre-90s, because that hotel boom ended in 94. After that, for 2 decades, we haven't seen hotel stocks do well. So such things also happen sometimes, that certain sectors start structurally doing well. So now would you give up on them too early? Then you would also miss out on the entire ride. So you have to know which themes are the themes of the bull market, what was driving it, and stay with it, because the themes don't change. They often remain the same for a 10-year period.
So speaking of the long run for the investors as well as the traders, like the retail ones, okay. Speaking of systems and instruments, how did you get the idea of strike? And how it is different from other tools also, like in the existing market scenario?
So what is available in the existing market right now are tools that have been created in different segments of the market. Without naming them, there's one which only does options. There's another which only does algos. Another which only does fundamental. Another which only does this. Another does that. But when you think of a professional tool, something like a Bloomberg or a Reuters terminal, it basically has all the data in one place. Okay. Now that's not the only reason the institutions use it. There's also, especially Bloomberg is used for a lot of communication between client and dealers to execute trades. So they use the messaging system is encrypted and considered safe for placing orders. So sometimes they don't pick up the call; they just place it online. So that's another part that people don't know what gives it that unique space. But coming back to the data part, what is important is that you can actually what makes us unique is not just we cover all market data, we cover data which is not on several platforms, specifically in sentiment indicators, tools that are globally used, like RRG. And then there's the visualization. So every tool, not just RRG, but sentiment or whether it's fundamentals, where a lot of work used to be required. I'll tell you, I've been a user of professional tools like Capital Line. Okay, now when you're using something like Capital Line, if you want to do a scan, say on fundamentally on a stock, that okay, how I want to know all the stocks whose earnings growth is has been growing by 10% per annum, and who has a certain debt to equity and has certain. You build a model and you say, I want the result of this in the stocks. It takes a huge process to write it, because you have to understand, because it's a very deep coding system that they have to write the language. They have their own language writing. And then once you've done that language writing, you have to run the scan, which takes several minutes to run it on the entire database. So where I had to come from, I'm sorry, I'm going to have to, bells are ringing away behind and there's no one at home. So I'm going to have to just step back and come.
Sure, sir. Okay, so I can see here a very good question. Sujal, we will be answering your question in a while after this session.
Whatever is that we've sort of visualized everything and made it very, very easy. To put it in short, some of the tools are still coming. Some of the fundamental advanced scanners, like what I talked about, are still on the way. But everything has to be click and go. So when you're thinking of retail, number one, it should not be priced like Bloomberg. It cannot be $3,000 for broad investors. Most people can't afford it. Number two, it has to be easy to use. So you have to be able to click, get results, and they should come quickly. And third, you should be able to visualize all data points, which means you want to see this chartically, you want to see this visually, whether it's historical valuation, historical earnings growth, seasonality. Everything should be in charts if possible. These are various things which have gone into the thinking that led to its development. Apart from that, when we were doing a mentorship program, we realized that a lot of the things I was teaching in terms of how to find winning stocks, how to scan them, how to find performance, what we call as Now a lot of people build performance-based portfolios, right? How do you do all that? How do you do relative strength analysis? It required to run scanners in or explorers in software like Metastock, or be able to code in TradingView using the coding tools available, right? So if you can't do any of that, can you do it at a click of a button? Why should you need it programmed and coded somewhere? And everybody doesn't have to become a coder. So these are the drawbacks for individuals that you have to simplify. And that, I think, that is the goal that we realized had to be there with our mentorship programs when we were teaching, that we need to make this easy for people to do.
That's where the strike comes in to fill the gap.
Yeah, that is how strike came in to fill the gap. Yes.
Right. So thank you, sir. It was a great I wanted to know that how did strikes got started and all. It was a great thing. Indeed, it's a great thing.
Yeah,
From the start
it is
till now.
people don't know. We have not yet really done any awareness campaigns, so it's mostly depending on word of mouth,
Right.
that people know that we are doing something like this. But anybody who's used it, I don't think they have any issue. Whatever issues are there in terms of, those are all what you call as near term things, like bug fixing, or whether it's the data flow. We've shifted to 1 minute on most feeds, and a lot of the other things will go live this week. Then it'll stop happening. Like for some time in between, people were coming on X and complaining on the participant data not updating in the night. Now there are times when NSE doesn't give it. There are times when we ourselves, our data vendor, was not doing it. Last week we automated it. Okay, so for those who are users here, we've automated it now. Every day moment it loads on the NSE server, within minutes it's updated in our on our charts. So now that problem is gone. So accordingly, it takes time, because our developers are working on multiple things, but that is also where we are headed.
Indeed, it's a very good tool, sir. Those who have used it and are using it, they are loving it. Indeed, it's a very good tool, and I will advise everyone to just have a look to it
and try it out. So okay, here's an offer for
Yes.
anyone who's not used it ever before, and you're like, I don't want to try one more tool, whatever. So you can DM me on any of my profile, preferably X. But if you're not on X, maybe Facebook or LinkedIn, YouTube. I don't know how you can DM me, because it's not a DM platform.
They can comment on the videos, but they can't DM you.
But
They can DM you on.
no comments over there, because then I can't directly message them. So you'll have to message me somewhere. You have to message me somewhere. I'll even leave you a number if you're listening: 9167650642. Okay. So there's a number. There's a number, or on any platform, X at Indiacharts, or Facebook Messenger at Indiacharts, or any of these. You message me that you want to try it out. I'll only take direct messages. I will not take public messages. Only direct messages for seriously interested people, and who've never used it before. You'll get 30 days free to use it. I cannot make a better offer than that. But it has to be a DM. I'm not taking public messages. Public messages on YouTube, no. You have to directly message me. So I gave you a number. You can WhatsApp 9167650642.
Guys, it's a good offer. It's a really good offer. So thank you, sir. That's it for today. We are wrapping up with the session and heading towards the comments.
People's questions?
Yeah, that's what I'm saying. Yeah, this is the wrap up of the session. Wrapping up the session and going forward with the comments, sir.
Yeah.
So going forward is the first question from Akash Soni.
Like Japan market, our market also become range in so many years. Is it possible? Please answer. Japanese market, apart from range, was below the 1990s peak for 20 years because it ended a bubble, a massive bubble. Its PE ratio had reached 55 times, as someone mentioned to me today. At that time, it had gone up exponentially one way. We can get there in around 8 years. We are not there yet. If at all we get to that point, it has to become that big a bubble. Are we that big a bubble? No, we are not.
So moving to the second question, Atul Bhatia.
Can we say we are at the possibility of second wave from April low and being one at the recent high? It's a very good question.
Sorry.
It's one that I and Jay was just debating half an hour ago. And our conclusion is no. If the recent top is a big top of some kind and you see further selling, it will not be wave one, it will be an X. Now, the reason it will be very hard to count the entire rise to this high as one. So far, can it be subdivided into a series of impulse waves, like for example, 1, 2, 3? Yes. That is how we are thinking about it, that we are probably in the early stages of wave 3. So if it breaks down, it won't be wave 3, it will be X. So that is where our thoughts are. That is what we've concluded. But to say that this will be 2 and it's going to be the deeper correction that didn't happen earlier, I think if it gets deeper, we'll probably call it X. That's my thought.
So moving to the next one. This question actually I also had in mind, something like this. Like
July is historically an up month. Can we next week see an uptrend? Nice one. I'm going to share strike only. So first we look at Nifty seasonality. Let me take a wide screen for those who find that easier to see. Overview, and I will expand the seasonality and look at a line graph. Yeah. So peak best month April. Yes, we had a super April this year. And then it's usually flat into May, June, and then you get a July. But June was actually good. So some people ask me, oh, June, we were up. But it was up only for partial. It had one bump up for 5 days and then we are dead. But even then, some people are wondering whether July will be good. So we've had a decline. We have 20 days left for the month of July. That's enough time for June to go from negative to positive, July to go from negative to positive. So the question becomes, have we hit an important bottom? So a couple of interesting observations that we can make on the Nifty chart. The first one we can make on the RSI itself. Okay, so and the reason I'm taking RSI, we'll soon see, is that when we go to a very low time frame like an hourly chart, then the RSI has been sub around 2019, really oversold for most of the day. Okay, around the 20s plus or minus. So it's down here. The last time it was there was here, back here when we had the Iran attacks. Okay, so when it got oversold here and then it recovered, now we are again that oversold on the hourly RSI. So that is just one indicator. So yeah, we always have to combine and you're looking at multiple things. The swing is dropping to 18. Okay, those who are users of swing are already swearing by it, because every time we have these kind of readings like here, the market has eventually moved higher. And for last few days, even as I was thinking it will go up, the only thing which was standing against me, swing was not yet oversold. Now it doesn't always get oversold, but I guess it wanted to. Now it is oversold. Now, so plus or minus a day, either today or Monday, between current levels and 25,080 would be 61% of this rise from this low. So somewhere in this range, in the next 50, 60 points, we are oversold already. It may not even fall that much. I don't know. But so there is a good chance that July can still turn positive if all these oversold readings give us a rally strong enough to go past the highs. Now, will it be strong enough is another question. Okay, we have oversold readings. We have domestic institutions holding the index long futures. You have FIs. I want to see really the FI data today, because index futures, they've been going short for the last 10 days. From 33,000 contracts on expiry day, now it has increased to 85,000 contracts yesterday. And in today's fall, if they manage to get to 1 lakh contracts, that's historically been an extreme. Okay, so if they get there, it would be a setup for a short squeeze. So for those people on X who are asking me, hey, do you have any data points on saying why the market will bounce back? Here's that. This is the date. This is one of the data points where the shorts are getting added up. So some more shorts get added up in today's data. It will only increase confidence with these oversold readings that you have an extreme short setup. For a complete short squeeze, all you need is a weekend announcement of a trade deal. Throwing in the bullish spanner over there.
That's why there was a question.
A weekend, one for the bear.
That's where we got another question. We got another question that the people are saying that कृपया करके बस वीकेंड में कोई बम ना फोड़ दे, जो आने वाला वो भी जाने वाला है.
कि रॉकेट जलाएगा वो तो पता नहीं ना.
That's all.
See, they've announced so
So
many tariffs this week. So either they have only two choices now. Either they have to kill India this weekend. Trump has two choices. Like, I've murdered everybody. Let's murder India now. Canada पे भी लगा दिया, Brazil पे भी लगा दिया. Or else you say, I've done all the bad things. Now let's do one good thing with India because we've been negotiating for so long. So they'll call up in India and they'll say, boss, we have to announce something by Sunday. Now you better get your act together. And we'll have an announcement on Sunday.
that's
And
where
everybody, you have the
it,
shot, everybody shot, and the setup is complete. Sorry,
that's
guys.
where कि इतने सारे पाप की एक पुण्य का काम कर लेता हूँ.
Exactly.
So that's it for today. Thank you everyone for joining us. Let's meet on Wednesday because on Monday we won't be having a session. On Wednesday, same 4 o'clock, we'll meet again. So trade smart, stay informed, and use strike. And also, you guys have a 30 days trial right now. If you guys go and DM sir. And yes, DM should be on LinkedIn, Instagram, or X. These are the 3 platforms where you guys can DM.
No
And
public message.
he can.
Or 9167650642.
You guys can actually just reverse the video and can hear the number also. So, thank you everyone. Thank you, sir.
Thank you. Thanks a lot.